Welcome to the closing beat, everybody. Happy Tuesday. How you doing, you beautiful people out there? Hope all is good. Hey, quick update. There'll be no closing beat this Thursday. Anniversary dinner. I gotta go clean up and get a haircut and stuff. Gotta do right on the old anniversary dinner. So there'll be no show, but we will of course be back. We're not hanging it up for good there. Also, this Thursday, our wine and wealth will be done by Eric, because I'll be at dinner. And he wants to talk about sort of the estate legacy planning thing, wants to talk about beneficiaries and stuff, because he has a lot of experience with the inevitable happening to us and making that easier, right? So it's just a silly thing you got to plan for, but he's got a lot of cool little tips and things that I've never covered. So that'll be Eric on Thursday. I hope you enjoy that. Those classes are every Thursday for our clients. They are in your portal. It shows you when we're going live and all that good stuff. And so we will be doing it that way. Our fin tips this August, everything we do is going to be focused on those of you that are in or near retirement, right? That's our focus. So the goal obviously being, we hope we attract clients, right? That's why I'm here, right? There's no secret there. But so the idea is that if you've been thinking about joining us or whatever, we want to start helping you with those more advanced topics there, because in September, all of our wine and wealths and additional classes will be focused on those of you in or around retirement. That's a different focus than people that are, 40 and you're out there working and stuff. We'll cover you guys too, but we've got a lot of questions for people. And as you can imagine, being based here in Florida, we have a lot of retirees that are clients, and so we're going to just dive so deep into all that stuff. I'm really excited about some of the things we're going to cover. We'll be using nest egg, all that great stuff, so that your plan, top to bottom, is covered. Should something change, you know how to bring it up. We know what we need to work through, so really excited about that one. Remember, our entire business is built around your success. We don't make money unless you grow, right? If you grow, we grow. That's how we like to say it. We actually stole that from somebody, but they don't use it anymore, so it's okay. So we'll be doing that starting tomorrow, of course, but then all through the month of August. So if you're in or around retirement, then come check out our fin tips videos. Some of them are free on our YouTube channel. The rest are in the portal there. As far as the S&P goes here today, that is time to focus on that. Got a little bit of a down day, right? And kind of wild, which is odd to say because it really wasn't that big of a deal today. If we look at the charts here, they're going to be way off. So let me just bring this down. We want everybody to see what's going on. There you go. That looks pretty good. So here's the S&P, right? Naturally, we've got our downtrend here. We're breaking through this downtrend. Hopefully, today has been that choppy back and forth day. We were down up 0.5% to start. We then rallied. We were up 0.5%. Then we're down 0.5%. We finished down just a little bit more than that. And it's a really busy week, but there's a lot of focus towards what's going on in Taiwan and everything, so the market's not sure that it wants to participate there. I will focus on that again and stick with my comments there that Pelosi going to Taiwan, despite being told not to, you get them, girl. Go out there. Go. You park your little butt there and take your pictures and everything. So I'm all for it. Unfortunately, that does put a little bit of stress on the end investor, right? Like I said yesterday, you don't force an investment in August. We know that. We know the stats. I've shared them with you, right? So it's time to game plan. It's time to strategize. It's not necessarily time to say, the market's bottom. Let's just go all in, right? Take your time. Let's figure out what you're going to do. Let's do this right so we don't have to come back and fix the mess later. And so, yeah, that put a little bit of a damper on the mood today. You probably know that. I don't have to tell you. Nonetheless, let's look at what we have here. So if you look at the S&P, this is going to be the same with the NASDAQ. So I'm not going to do this twice, but I'm going to just show this here. You got to rally off of lows. Where did it stop? And for fun, let's just go to the NASDAQ. We'll do it there, right? Where did the rally stop so far? Right back here at these prior highs. Technical traders call that major resistance, right? It's a prior place that the stock ended up moving lower. So if you want to sound fancy, you say major resistance. Minor resistance would be at the bottom if the first pivot area was actually a bottom, not a top. Anyways, you got a rally back here to highs. So what do I always tell you guys? Technical analysis is fine. It's a beautiful way to look at the history of what's happened, to get an idea of if you have a discount or you're paying too much. You can use fundamentals as well. Fundamentals tell you why you want to buy a stock. Technicals tell you when you might want to buy the stock that you now want to buy. So I don't have a problem with either one of them. When you're going to focus mostly on technical analysis, here's what I want you to do. You unfortunately have to learn every pattern that people like to follow, because at the end of the day, it's just humans making decisions about what they see. So we first have a major resistance area. It's taught in all the technical analysis books and everything, so you probably know what I'm talking about. The second thing we have is, where did this rally stop so far? Well, it stopped there. We know that. But it also stopped halfway between the low and the high. Now, there are fancy tools you can use. I think I have one here. Let's do this. So you can probably pop up one of these. We can draw a line that will plot the halfway point. It should anyways. Yeah, there you go. So it's not pretty, but look right here. We can now verify. We don't even have to like guess the numbers and do all that. It just shows you. We've stopped halfway between the most recent high and the most recent low, right? So is the glass half empty or is it half full, right? I don't know. That's like having a glass of water that's half filled up. We could debate, although we seem to be debating other topics in the media right now. We could debate half full, half empty. Is that glass, does it identify as half? You like where I'm going with this? Does it identify as full or does it identify as empty or half empty? We don't know, right? This is one case where we could genuinely say it's just half, right? So think about that. You have half the people out there going, that's a top, and half the people saying, that's just halfway. Here we go. We're going on our way back to 100%, baby. This is great. The point being, you're playing tug of war with half the participants in the market. This is another reason why I say you don't make a major decision in August. It just happens this is happening in August, but you are, for every person that thinks the market's going higher, we now know there's somebody that thinks the market's going lower. Why you want to do that? Is that the most ideal time to invest, right? You would like to be more of a contrarian and say, when most people think the market's going lower, I smell a discount, I think I'm going to look at doing something like that. So that's where the NASDAQ's at. It's where the S&P is at. Be very careful with new decisions from here. That doesn't mean that there can't be individual stocks that are showing more strength, individual stocks that are still just bleeding off a little bit and you still think it's a discount. That's fine. But as a broad index-based investor, if you're not dollar cost averaging and you're just saying, I've got lump sums of money that I want to do here, you might put the brakes on just a little bit or hold some back in cash. A little bit of money to work, put a little bit in cash. So that's the lesson in the NASDAQ. It's the lesson in the S&P. We could pick on stocks all day long. It's the lesson in the Dow, just a little bit weaker, not quite as strong there recently here. And it's not quite the lesson in the Russell, although I'll give it that one. I'll say it's halfway and it's also back at this prior high. But you can see now after all our drawings, it's not quite there. So a little bit of weakness going on over there. Now, this brings me to a quick point. Why do I do these shows? It's marketing. You know, it's just, hey, name is there, make it sound fun and relaxing and all and teach you something, right? But why do we do this? I don't look at the market every day to be a stock picker. I had a gentleman earlier today say, well, I just buy mutual funds. I'm not really interested in what you do. I like the planning side of it, so I'm in for the planning. But I'm not really going to watch the closing beat. I have no interest in looking at individual stocks. I buy my mutual funds. I'm happy with that. Mutual funds are made up of stocks, and stocks move the mutual fund. And most of you probably know this, right? So he said, what was his fund? TBCIX. Great fund, by the way. Great growth fund, solid track record. I happen to know one of the fund managers. I'm not biased, but it's a great fund. Tends to move up a little bit more than the market on the way up and not as much on the way down. That's great in terms of volatility and performance. You like to see that. But he said, I can't watch the show as much because I don't like to look at individual stocks. And I said, well, I just happen to know from looking at this in the past off the top of my head that 40% of your TBCIX is Apple, Amazon, Microsoft, and Google. So wouldn't you kind of like to know how they're performing on a daily basis? You don't have to go stock picking, but you go, hey, I noticed that Apple lately has been on a tear. I noticed that Amazon's been struggling lately, but it's finally getting going after earnings. Well, that's good. That's a reference point to your fund. You should see increased performance, and he will, right? So that's why we do this. I do this to point these things out, like oil is a little bit stronger, it's a little bit weaker, whatever's happening, so that you go, oh, darn it, I have 12% energy in one of the funds that I have or in my 401k or something. That's going to hurt a little bit. I understand that, right? And that's the whole point of this. So keep that in mind. I'm not trying to be stock picker. I do have a lot of fun with that, and I enjoy that, but I'm interested in how is the bulk of what you have moving forward. And that's why we kind of do the show there. Anyways, a little bit of an off-topic shoot there, so let's go back over to the charts. Pop into the S&P. You now know what's going on there. This, by the way, this week is the last busy week of earnings season, so it dies down from here. So just buckle up and hold on a little bit more there. If you don't like what's going on now, it's almost over. Go finish up your vacation. Come back next week. It'll all be good there. It's the first time. Let's go over here. It's the first time since COVID, which I don't have on my chart anymore because thankfully that's a distant past. Well, we hope it's a distant past there. But it's the first time that we've seen more companies lower guidance than raise guidance since COVID there. You have 8.3% of the S&P, this index here, lowering guidance, whereas we have 5.9% of the S&P raising guidance. So that's a deep in the woods kind of an statistic there. But all that really is saying is when you see people say the economy's slowing, right? The Fed is trying to slow things down. The stock market doesn't have that juice that it used to have in there. Now you know why that is. Companies are resetting their expectations. COVID pop was good. We're all happy. But now we're resetting them back down here. And so it's another data point, just like what I shared with you yesterday, that, yeah, we're slowing down a little bit. And it's okay. I'm going to share something with you here in just a little bit to show you that a little bit more. Now, the 8.3% of the S&P lowering guidance, it's actually not uncommon. It's just an increase, right? So that's all we're looking at. It's not, doom and gloom, and there's nothing scary going on there. But it's that confirmation that when you see on TV companies saying, well, we're going to freeze hiring for 2 weeks, like Alphabet. We're going to maybe stop hiring for the rest of the year, like some of the beaten down stocks that are out there, Etsy and such. It's just confirmation that, yeah, okay, I get that. They're lowering guidance, resetting things the way they want to do there. Another confirmation of that, I'll share this with you here. Another confirmation that is fun to look at because it's all public data is the national job postings by industry. You can track it. And you don't have to because we're going to do it for you there. But you can look at the types of job postings that are increasing and the types of job postings that are decreasing, right? We are a service-based economy, so we want to see service-based jobs or anything that supports the service industry, retail as well. We want to see that stuff increasing, not decreasing. Well, let's take a look. So here is national job postings change year to date, meaning the change in the number, percentage change in the number of jobs added in these industries. Civil engineering, 26% increase. If you are an engineer with a focus on civil engineering, jobs are plentiful, right? If you're a dentist or in the dental space, this is not just dentists, 18% increase. Engineering is in here a couple of times, right? Electrical and industrial. And just off of here, you're going to have aerospace as well. We just wanted to put 10 just to show you. So we've got sporting. We've got accounting, basic businesses in here, physicians and surgeons. That's actually considerably higher than it normally is as far as the year-over-year rate of change. So I don't know what's going on there. Sticking with somewhat of healthcare, veterinarians, architecture, and things like that. No service. Where's the service business? We are out there as consumers buying and hoping to be served, for lack of a better explanation, going and buying a drink, right? Going out to a restaurant, eating out versus going to the store. So that's not good, but it's not bad unless the service-based businesses are showing a decline in job opportunities. Well, if we look at over here, these are the 10 worst. 40% drop in loading and stocking. What does that tell you? 40% less jobs for people to pick up goods, put them on the shelf so they can eventually be sold to people like us, consumers, the American population, and many countries as well. So that's not good. Human resources. If jobs are continuing to be plentiful, then why do we have less HR people? Could be digitization, right? There's an argument for that. But so quickly, right? This whole digitization move into HR is not something that just started this year. So that's a little suspect. Production and manufacturing. Right? We now have less jobs for producing the stuff that the loading people will put on the shelf that the consumer will eventually buy. See how we're putting the pieces together here. Marketing. Ooh, well, that's typical. When the economy gets a little bit weak, we tend to spend less on marketing. Therefore, there's less marketing jobs available. Media, communications, logistics support, all revolving around the movement or delivery of products that we hopefully are still buying as a robust consumer, supposedly, right? Not out there. And you got some software development, which is shocking to see that. That's Google and everybody saying, we're not going to hire developers for a little bit. We're going to take a little bit of a break there. Mathematics, I honestly don't know what that is. I should have looked that up. I don't know if it's not education. That's a different category. So I don't know what mathematicians are being hired for. So I can't tell you. Customer service, Got a problem with a thing that you just bought because somebody put it on a shelf, and then when they went to deliver it to you, they dropped it and it got to you and it was broken? You call customer service. We need less of those people. So you see, yeah, that's kind of going together. It's not doom and gloom, but that also confirms that we have a slowdown, right? And it's very normal. It's what the Fed wanted. It's what the Fed is getting. And it's probably a good thing that that happens there. Anyways, so a little different thing than we normally talk about here, but I was trying to talk about the general economy. The NASDAQ, right? You know the drill here. We're back to prior highs. It's back to these prior highs. It's up 50%, or it's in the 50% area as far as recoveries go there. Glass half empty, half full. You get what we're saying there. We're still down 20% year to date. But if you look at our notes from Jazz, it's an email that I do every weekend there. I show you that there's a reason for a pinch of optimism, right? Just a pinch. There's no reason for a move back to highs, right? There's just a reason for a pinch of optimism. That's it. That's all I'm saying. So when you have that lump sum of money, you now know August, not the time to go full force, right? Put a little money in there, hold back, wait for an opportunity, right? Especially if you've got plenty of time. You also know that the economy's slowing down. We can prove it. We've been showing this for 2 days now, and actually go back to last week as well. That's okay. We need the slowdown. Not a big deal there. We also know that there are things in the economy, look at the notes from Jazz there, things in the stock market, the economy that are showing, okay, we have the support to get this rally, to justify what we've seen here. So not a big deal, but it's just not amazing, right? So hopefully I've painted a picture for you that lets you say, put my hands under my seat, sit down, and don't let those hands click the mouse button too aggressively to hit the buy button. It's just not the time, right? It's not bad. It's just not quite the time. All right. So, that's everything I got there. New highs and new lows. There were just a couple of them. We've skipped this here for a while because as a market comes off of lows, you naturally have less new lows. We only had one today. It was Cincinnati Financial. But as the market moves up to new highs, well, we haven't got there yet. We're hopefully headed that way at some point, but there's no stock after having a beatdown of over 20% for the average stock in the S&P. There's no reason for that to all of a sudden be poof, there we go, new highs. So we don't see a lot of those. Again, Cincinnati Financial here is the recent new low. Regional bank there. It's actually a pretty well-run bank, but going through a little bit of a rough patch there. I would say it was overpriced for a while. New highs, you got Hershey showing relative strength there. The trouble is a lot of these are extended, right? End phase is another good one here, right? The breakout that we talked about in here, okay, it continued. That's fine. Too far, too fast. It's hard to chase that. So I haven't really talked about new highs and lows because, there's nothing great to offer you there, and I don't want to just talk about stuff for the sake of talking about it, right? We've got to have something better. All right, stocks in the news here. Let's talk about it. First up, Uber. I don't know when these guys are going to get it together, but people are excited about it now. They do $8 billion in revenue. Good job, right? Oh, that's awesome. They still lost money. Cash flow positive, but they still lost money. What do you do there? I don't know. The focus was on cash flow being positive. Okay, maybe now that's a turn to profitability. Maybe we can do something now. Take rate was higher, which is sad because it means they're taking more from drivers, which means that's the path that they've figured out they need to go down to make them a profit. They need to take more, give the drivers less there. That's a delicate balance, you know that. Total trips were down in total, but the profit per trip was higher. This is the same thing we've been talking about with the food suppliers, everything that we've been looking at so far. People were buying less, but paying higher prices, and that made up that margin gap for them. Well, Uber doesn't have a margin, I guess, but that made up the difference for them so that it wasn't as bad as expected. Marriott, back to the 200-day moving average and rejected here today. Why is that? Minor resistance. Is it about halfway? Is there a lot of stocks looking like that right now? All right. Think about it. Someone owns the stock, right? Oh, crap, it fell. Rallies back about halfway. You go, that's not so bad. I was staring at a pretty big loss for a while there. I'll take a smaller loss to get out. That's going to happen as the market starts to rally back there. Marriott beats basically, and they said we're going to start our share buybacks again. So the stock was positive for just a moment there. Revenue per available room, some of the metrics that are unique to the individual stock, was up 4%. Occupancy came in at 67.8 versus 67. It's not very impressive. The problem, if you really are into this stock, the problem here is the same as what we just saw in Uber. So not a bad earnings report, but when you dig into it, the fact that they beat on earnings there was really due to higher pricing and consistent demand. Same demand, but at a higher price, okay, you're going to beat on earnings there. It doesn't represent long-term consistent growth, so I think there's going to be a little question mark there if I had to say that there. JetBlue, also seeing high and steady demand there. Average fare is up, it was 2% higher than what was expected, and we already raised the bar. Wall Street already raised the bar pretty high there. Remember the metrics here. Let's see if you can guess, remember what they are. I won't do the definitions again, but revenue per available seat mile, very popular with the airlines, up 35%. If it wouldn't have been for the rest of the report, that would have been pretty impressive there. Load factor, which is the focus. You know that? Revenue per available seat mile and load factor. We've covered that every earnings season when they start reporting. So that missed. That was not even close. And then they said, hey, we'll be profitable later this year. Well, what happens? People look at that and they say, well, then why am I investing now? Right? I'll wait, see if I can get a discount, and then participate when you guys hopefully make that profit. If you don't, then at least I didn't pay top dollar or anywhere near top dollar for the stock there. Caterpillar's up next, a little reversal there for them. That was just a miss on everything. I don't have to say all the metrics. Earnings, revenue, just missed. Not a good one for them. They blamed it on China, said they're seeing less sales out of China, but they guided higher because they said everywhere else, strong demand, strong volume, sales on their products, right? So they're like, give us a break on this one. Wall Street said no. And speaking of nothing I just said, actually, Marathon Petroleum, this is a textbook definition of beating on earnings in the best way humanly possible. They killed it. Great job by Marathon Petroleum. And, well, we all know why, right? It's a lot of money for a barrel of oil. Anyways, huge beat for Marathon Petroleum there. If we look through it here, they beat on earnings by more than 22%. Analysts were off by that much. It's not that the analysts were bad. They were just factoring in normal growth, and they said, check it out, guys. Look what we did. We made a whole lot more money. Now, what you're going to see on TV maybe from politicians is the margin per barrel. Have you ever wondered that? Like, okay, you see on TV where the politicians are like, they make too much money, man. They need to lower their prices and maybe not make so much money. No, it's America. They can make whatever they want if people are willing to pay it. But check this out. Their margin was $37.54 per barrel sold. That's a record, right? Very nice there. It was 11% higher than expected, and that sets records. So these guys leading the way at the moment. There's other companies that make more, but they do other things as well with that barrel of oil, so it's not a fair comparison there. But nonetheless, firing on all cylinders to make it sound a little bit fancy there for you for Marathon Petroleum. Great job. Speaking of which, if we look at oil, we don't have to look at it, I guess. It didn't really do much. It's stuck right in here, closed below the 200-day. That's the first close below the 200-day. Well, since all the way back over here. Yeah, because it didn't actually close there. So, okay, no problem. Oil getting a little weaker. I expect that to be volatile as you go into Wednesday's oil inventory numbers, as well as whatever happens in Taiwan overnight, because the chips are moving over there. Also, bonds took a break there. So rates moved a little bit higher today after falling for about 3 weeks straight. So very nice. Okay, that's all I have for you as far as these things go. Remember, we will not be here on Thursday. I'll take your questions now and see what I can do to answer your questions here. Did I miss science? Yeah, sorry, Florida habit there. I didn't even see it on the thing. I was busy trying to make a point. What do we got? Human resources, marketing, media. Oh, scientific research and development. Yep, let's focus on science. It's not so important. You know what I mean? We don't need science anymore. What? Oh, man. Okay, so a question about AMD. Careful on the semiconductors here. They have yet to really show any problems. Now, Taiwan Semiconductors, obviously you can figure out that they produce in Taiwan. The bulk of their business is done over. I think actually all of it is, all the chips are made in Taiwan. Well, do you want to walk into that? That's like saying, I'm going to play the bond market knowing the Fed meeting is in a day or two. You're walking into volatility. It's not wrong. It's just you're going to expect a more wild ride than what you would have had. Hey, I'm going to play semiconductor chips and make my best guess right here, not knowing what's happening in Taiwan at the moment, now that it's getting into the start of their next day. Do I want to make a decision on that right now? Right? I don't know. What do you think about Nancy visiting Taiwan? You think China will start a war? Yeah, we talked about that yesterday and today. I don't care much for the person, but I support her efforts. I would not back down either. I don't know what China will do. I have a feeling it'll be like the past, where it's a lot of loud barking, not a lot of bite. You know, and hopefully that's the case. Certainly don't want problems. What's the green cube behind me? Is that the refrigerator? Yeah, that is that's the Mountain Dew refrigerator. Cody got me that for my birthday. It's a little refrigerator that says something Mountain Dew on it. Do the dew, baby. Yeah, there's nothing in it at the moment because we can't keep Mountain Dew in there. It's a bit of a problem. You like the joke, Doc. Yeah. I got to start learning how to wink. So when I make those little jokes, I can just throw out a wink. Yep. Not opposed to semiconductors. I just, yeah. Do you wanna be in there? Yep. Timothy saying, talking about DNN and BJ's wholesale is safe to assume they get 20% of the Costco market share. That is a tough one. I don't think so. They just don't have the presence. If they were to make a move into expanding their presence, this would be the wrong time to do it. That is extremely expensive for them to do. But if they did, that's the only way they could catch up there. Need more stores. That'd be like if Lowe's had half as many stores as Home Depot. It really wouldn't matter the location so much, you know, to a degree. You just couldn't keep up with Home Depot, nonetheless beat them. Oh, here we go with the ARC stuff again. Yeah? Is that what we're doing? ARC is killing it. I don't see that. Is that killing it? Maybe because it dropped so much, this little rally is a lot bigger than it really is. Yeah, you got a lot of work to do there. But, okay. Are I-bonds good? There is a place for them. Are they good in the sense, hey, am I going to get ripped off? Or, you know what I mean? No, no problem there. There you go. You think Meta is going to be a surprise? Long term, I think the dedication they have to what they're doing with the metaverse, okay. Yeah, they have to execute, but there's nothing that says that they can't do it, given their history there. What sector are you shopping if you were shopping? That's a good question. So I like healthcare, financials, and then very slowly, like third place, distant third would be tech. Distant. What do you think about the end of the student loan pause? I think it's coming up, right? You got to the end of the month, which is a good question about if you had recurring payments set up automatically, are you going to get notified that they're just turning back on? Because there's been really no communication that I've heard of. I keep having clients ask me that. Do we just start again? Are they going to tell me what my pay date was? Is it just pick up where we left off? You assume that at the end of the month, it's over, and you need to start making those payments, right? Don't assume someone's going to come save you again. It's time to get back to work, paying those things off. Yep. Expecting more downside because of Nancy's trip. Not because of Nancy's trip so much. I guess there could be an outlier event there or something that is caught off guard. But I think the pullback or any decline is more due to, hey, we need to pull back a little bit, right? We need to take a break. Went a little bit too far, too fast there. That's what I look at. If it happens to be because of the news there, that's fine. Yeah. You like the healthcare too? Yeah. Yeah. Oil is a natural resource, and the world economy depends on it. So how come traders can determine the oil prices? I'm not sure what that question is. How come traders? I think it depends on what trader you're asking, right? If they're able to determine the oil prices. If you know somebody, let me know. I didn't see Prudential just yet. I got a little distracted there before we started. What do you think about holding short-term treasuries for shorter-term money? You'd have to be more specific there because there's a number of ways to do it. I don't like the idea of participating in the bond market in the short term, even through short-term treasuries. I think you're going to find a little illiquidity there, except for certain times of the month where they have their sales or the government issues new bonds. Oh, you think they're going to extend it again? Financial wisdom. You going on that side? You think it gets extended? I mean, yeah, I guess it wouldn't surprise me. I kind of expected them to start pushing the relief. Hey, we're going to pay off 10,000, whatever the number was. I kind of expected that push to start already. I get that there's other things going on, but cutting it a little close there. So maybe that's used as an excuse. They say, well, we want to talk about this a little bit. Extend it another month so we get a chance to talk about it. Yeah, maybe. Eloy, you're 58% in stocks, rest in cash right now. Too conservative? Well, I don't know. That's a tough one to say because I don't know where you're at, right? And that 58% that's in stocks, the rest in cash, do you need that money coming up soon? Did you do that for a reason that maybe you hope to you know, buy a car, go on a trip or something? So that's a tough one. Really depends on where you're at with those specific dollars. Breakout, retest, resumption. That's how you describe it as it finds support. You could just say pivot too. Any pivot, pullback pivot. Yeah. You only started adding to your Roth account very recently. Okay. They always say the best time to invest was yesterday. The next best time is today. So I don't know who said that, but I'll go with that. Well, thank you, Paulus, for the compliment. Appreciate that. You think the loan extension is going to get extended? Should we do like a bet? Have like do something like an office bet or something? I actually don't have any data to suggest one way or the other, so I'm not cheating. It's just a guess. Yeah. Okay, so ideally you're buying a house, so you're keeping some cash, but you're not 100% sure. If you're buying a house in the next 2 years, don't do it. If you're buying a house in the next 7 years, then there's no or within the next 7 years, there's no guarantee that you will have more money today or tomorrow than you started with today. We did a class on that where we looked at every peak to trough in the market, so we could figure out like how aggressive could you be and know for sure that after a certain period of time you'd actually have more dollars than you started with, and it's just after 7 years. I'm gonna do an office bet. Hey, that's true. Did you find a hobby, mister? Since he said it, not me. He said, yes, he did. It was Tinder. He found a hobby. And he was quick with that answer, too. So I don't know if I was supposed to say that there, but I guess Cody found a hobby there. Go look him up, man. Swipe right? Left? No. Okay. All right. Okay. Yeah, they're going to go buy Match now. Match.com. They own it. Okay. You guys found out a little bit more than you were hoping to today, huh? That's the joys of a live show. I'd like it to be known on record, too, that I'm not on there. Never will be, never have been. Got an anniversary dinner coming up. Need that to go well. Need that to go real well. All right, we have fallen off the railroad here. Thank you for stopping by. We will be here tomorrow, of course. We'll do this all over again. There's nothing to suggest more volatility, more action tomorrow. There's no earnings that could push us one way or the other that actually would have an impact on the market. There's just that geopolitical news that you'd have to, focus on. And I don't know what could happen. So you guys enjoy the rest of your day or evening, and we will see you tomorrow.